What is going on, traders? Welcome back to the YouTube channel. My name is Kyle Williams, and we just finished, me, myself, Dom, and Huddy, just finished our first online bootcamp. It was our first ever. We did it. It's done. It was awesome turnout, great participation from all the people who went, tons of great guest speakers, etc. Pretty much maybe the three main things that I took away from it. And again, as a trader who's been trading over 8 years now, there's always new things I can learn. And on top of now being a teacher, I actually learn and relearn things just as well as any beginner student. And so I want to go over with you the three main things that stuck out to me in this particular bootcamp and instance, things that point out, and I think that things I really think you can get, take away some awesome things from without having to have been at the bootcamp, right? So the first thing that really stuck out to me was how specific you as a trader need to be when you're deciding what and where and when and why to trade. Perfect example of this, and then I will use the example that we actually did in the bootcamp today, NXL. Okay, when you look at a chart like this, a stock that's run from, 70 cents as high as, high twos, almost $3, some people might look at this high that was set yesterday at 272, and they might think, buying over that high today is a breakout. And a lot of us, especially me and Dom, argued no, it wasn't. Why? Because you're not being specific of what kind of breakout. Sure, if you want to call it a less than a day breakout, a 5-hour breakout of like real trading hours that have gone by, sure, you can call it that, right? But when it comes to a really solid breakout, a breakout that I think a lot of veteran traders know, they immediately think of multi-day breakout, multi-week breakout, multi-month breakout, right? Some kind of time frame that has passed, not just a new higher high or a new high that's been set in the run-up, right? So when I look at NXL here, I see a breakout at 150 that was set, 1, 2, 3, 4 days ago. And it broke out yesterday on this candle over 150 and ran to 272. The fact that NXL here is ran higher over 272 for a brief period, there you see this wick here, that's just a new high being set within the breakout that already happened yesterday. It's not a new breakout. The multi-day breakout was yesterday at 150. There's no new breakout set up here if you're looking at a multi-day, which again, in my opinion, is the best kind. If you're just here to buy hourly breakouts, I'm sure there's someone with a setup like that, but in the small cap space that we were specifically going over at this time, that's not really a profitable or consistent setup that we've seen. And someone else can see it, but we look at multi-day, multi-week, multi-month. We want a very solid long time frame to have the best odds of that particular breakout working. Okay, and so something on NXL here, it's very easy for a new trader to just see it make a new high over any time frame. Again, if it's daily, weekly, or monthly, then great. But if it's over less than 1 day of price action, right? If we go to the intraday and it's, it went to made new highs, set that high of 272, yesterday morning, and then did it midday today, it's not even a full 24 hours almost, or a little bit over 24 hours. That's not a breakout. That's just a newer high. And again, this ties in perfectly as to why some beginning traders would make that mistake and then lose money on it. Because guess what you would have done? You would have bought that breakout over 272. It goes to 295, and within 30 minutes later, you'd be down in that position. It pulled back down to 240s. And newer traders would be confused of oh my gosh, I thought I was buying a breakout. Why am I losing money? You got to be specific. It's not actually a solid breakout setup. So that's the number one thing is be very specific with what you're doing. Be very detailed on what type of breakout you're buying, not just a newer, again, high in the run up of the breakout that's already happened, almost $1 or well over $1 a share ago. In this case, 150 to 250, right? So that's number one.
Ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
Now, the second thing that really stood out with me, and this has happened actually time and time again, so I constantly want to pound the table on this concept that I'm about to explain here, is knowing one, when to size up as a newer trader, and then two, how to size up, okay? I love what Dom said in the bootcamp. He said, if you think you're not going fast enough, that's a good thing. I'm kind of paraphrasing what he said, but he's like, you can't go any slower. Like if you think you're going slow, believe me, you're not going slow enough when it comes to sizing up. Okay, it is a very intricate, detailed process. And the most common mistake I see traders make when they do it, they go too big too soon. They're risking $100 and they immediately go to $200. And then when they take a $200 loss that they're not used to, all of a sudden it's like, oh my gosh, I'll never do that again. It makes me so emotional. I can't believe I just gave $200 away. Oh, I hate it. And they go back down to 100 and they never progress. Okay, the key is taking very minor baby steps. Instead of risking 100, risk 110, and then go a full month, maybe 2 months of being able to take $110 losses over and over and over again, get very comfortable, and then go to 120, right? Do that for a month or two, then 130, then 140, then 150, and then maybe you can start to escalate a bit. Then you go to 175, then you go to 2, then you go to 250, right? Take some kind of smaller percentage steps. Do not just try to double, triple, quadruple your risk and think you're going to trade the same. You're not. It's a human nature. It's not going to happen. Okay. Now, in terms of when to actually get there, like how do you even know if I'm ready to size up? If you haven't, let's go back to the $100 example. If you haven't even gotten 2, 3, 4, 5 months under your belt of consistent profitability, being green at least every other week, every month, or every quarter, if you haven't had a good stretch of green, proving that your losses are bigger than your gains, proving that you have a good win rate or a good risk reward, right? Really putting every little piece of that system and that strategy together to then come out profitable, consistently profitable. If you aren't there yet and you're still losing, say $100 a trade, you're not ready to go to 110 or 120, etc. Okay. Really build that foundation of consistent profitability. And then from there, do not go and double and triple your risk. Do 10%, 15%, 20%, right? Take the small emotional baby steps. Do not try to double, triple, because the moment you take that double, triple loss, which will happen, likely it's the first time for most people, they get scared and they run right back into the little hole of what's comfortable for them, which in this case is $100, right? You're never going to get anywhere. You're never going to grow. You've got to go slowly. Number 3, understanding risk reward and understanding that it does not mean you have to time the top and the bottom. Okay, now what do I mean by that? Let's go to the hottest runner of the day here, MLGO. Okay, MLGO has now ran from $5 in the morning and is now all the way up to nearly 11. It's going nuts as I'm making this video. A lot of traders, and I saw this a lot in general, not just the bootcamp, trying to figure out how to one, get a really good risk reward, but 2, also how to, in essence, be perfect, right? Try to find the top, try to find the bottom, and never really leave money on the table. Try to really figure out how can you just maximize your trading. The first thing I'm going to say is profitable traders know that there's never going to be a perfect maximization ever to be made. I want to tell people I leave profits on the table for a living. I mean, seriously, I don't even want to do the math of how much money I've left on the table, whether it be I enter too late, whether I exit too quickly or too early, whatever the case it may be, I leave money on the table all the time. And it's not about being perfect. It's all about just capturing the risk reward that's important and significant to you and your strategy and doing that over and over and over again. So MLGO here, I didn't trade this, but I actually did say pre-market in the morning. I said, you know what? This has a tendency to either squeeze a ton or dump a ton, right? Last time it gapped up, which was only a few days ago, it gapped up 50% and it got crushed from $5 all the way down to $3. Now, naturally, a lot of short sellers missed that move. I missed that move. And so when it's gapping up again to the 5s, I bet you a lot of short sellers thought, hey, this is my second chance. I'm able to short this and this might fade off. However, they forget that this had one huge squeeze day, another huge squeeze day, even a few months back or early last year or late last year had another huge squeeze day. So this is a ticker that, if it's not going to die and fade off, it's going to go up a lot. And so I remember pre-market telling myself, hey, I should probably long this. Again, I didn't. It's not really a long setup that I feel comfortable taking. Nonetheless, let's just hypothetically play out. Let's say I did take it. Let's say I saw that at morning spiked from 5 all the way up to mid 6s. I said, you know what? I think this is going to go to $7, $8. How do I structure a trade plan around this? Okay. Well, you'll notice here, we zoom in, right? We have a few dips being held, right? First is at 560 or like 550-ish, 558 to be exact. And then we have this really solid base being formed. At the lowest, this is 574, 581, 580. And then we have a few candles here, a 580, 580, 577. So clearly there's this support being formed, okay? And let's say I start in risking the low of 550. And then as things kind of progress, as it starts putting these bottoms, I ultimately get long at like not even perfect, a $6 average. And eventually I risk this 575 level, okay? Now, I'm along at 6. I'm risking 25 cents a share. I'm looking for a move to 7 or 8. That's a very good 4-to-1, 5-to-1, 6-to-1, 7-to-1, wherever I end up selling between $7 and $8, right? Let's say I'm not even perfect, not even close to being perfect. I sell at 7, okay? So I make a good 4-to-1 trade. Awesome. Never should knock down a 4-to-1 trade. A beginning trader would then have sold at 7 and now see it at 11 and be like, oh, dang it. Like, I should have held it for longer. Look how much risk reward I would have made. And that's the problem when it becomes to risk reward, is that it's hindsight. You know, when I'm buying at 6, I don't know if it's going to go to 7. I don't even know if it's going to go to 650. I'm guesstimating. I'm trying to put myself in a good risk reward scenario by saying, hey, if this works well, I should make 4-to-1. But I don't know where it's going to go. Had I been even crazier at the time, and it would have been right this scenario around, I would have said, you know what, I'm longing at 6. I'm going to wait till 12. You know, it would have been a 20-to-1 risk reward or whatever it is. And, you know, sitting here, I'd be like, oh my gosh, wow, I'm almost at 12. I'm almost right. But again, this is completely in hindsight. So with trade structuring and trade planning, one, you really never know the risk reward till it plays out. Right? You only can get as much information and use as much information as you can in real time. And however the trade plays out, it does. And then on top of that, even if you do capture the risk reward you were looking for and the stock still goes higher if you're long or still lower if you were short, and then you're beating yourself up because you missed more money on the table, again, that's hindsight trading. Your plan was to long at 6 and sell at 7. You got that. Congratulations, you made a great trade, right? There's nothing wrong with capturing that. In fact, doing that over and over and over again is how some of these amazing traders get rich. They're not looking for this one massive win that's going to be to their entire career. They're looking to take consistent gains over and over and over again. And yes, sure, there's going to be the big wins here and there. Yes, sometimes maybe MLG would have spiked faster than you would have thought. And so you do get the exits at the 8, 9s, and 10s over 7, and you adapt over time and get better, obviously. But never knock a good risk reward trade. I don't care if MLGO went to 100. The point is you took the trade that you thought was most predictable for your strategy and your style, and you nailed it, right? And again, this is a whole hypothetical trade. I didn't even take this trade. We're just walking through the motions of what the chart is giving us today. But understand that. Understand all those concepts I talked about, because again, I could walk you down memory lane of all the tickers and all the money I've left on the table. Right. But the reality is that's not what is important. What is important is all the trades that I made good trade plans for, that I followed, and then I locked in profits in the way. And you do that hundreds, if not thousands of trades over multiple years, and you can lead up to millions. Right. So yeah, those are the 3 main things that I took away from the bootcamp. All incredible, important lessons that I think every experienced and or beginner trader needs to get good at. Again, there's many other facets besides the 3 that I just brought up, but those were the most common things that I saw. But anyways, guys, if you missed the bootcamp, we have more coming up. Very popular question was, when is our next in-person bootcamp? And we haven't put any super strong details together, but again, stay tuned. The end of 2024, maybe early 2025, we're planning on a West Coast, like California-esque bootcamp. So stay tuned for that. And as always, make sure you like and subscribe, and I'll see you guys next time. Peace. Bye.